We're joined telephonically by Rashaad Tayob, who's from Abax Investments. Rashaad, good to have you with us today. As you've heard, commentary coming from both Chris and Donna in studio with us here. And again, perhaps that it isn't a thin market that we're in at the moment, but again, harsh extremes as we see in movements on the equity space. Has this translated into the bond markets too this morning?
Yes, for what is supposedly a safe asset like bonds, I mean, the movements have been as extreme as we've seen in financial crisis. So I would equate what happened in the last 2 days to our own version of the 2008 financial crisis. It was just specific to SA. The bond yields moved up around 170 basis points over 2 days. So you had seen a weakening in the bond market. You know, everyone was expecting that leading up to the Fed meeting coming up on Wednesday. But then the announcement of Nene's dismissal, just ramped up that nervousness, and it essentially turned into a panic state. We've recovered today by about 100 basis points, but we're still at relatively elevated levels. And I think the market is likely to price in a bit more risk premium in South African bonds going forward, which unfortunately will impact the funding costs of the country. So I think it is quite quantifiable, the damage that the last 2 days has caused to the economy.
Rashaad, thank you so much for your time today. Good having you join us for analysis.